Hey guys, this is Justin from nextbigtrade.com. I want to do a quick video on kind of what I'm looking for in the major market indexes as this stock market correction starts unfolding. So if you look at the emerging markets ETF, if you go back to 2015, it's kind of interesting what happened, and we saw the EEM start to roll over below the key moving average and get into a stage 4 decline. And this was back around June 2015. And if you compare that to what was going on in the Russell 2000, the Russell started rolling over as well back then. And at the same time, the S&P 500 was consolidating and working off of the big uptrend that occurred in 2013 and 14. And turns out what happened, this early kind of warning sign, stage 4 in the emerging markets, was a harbinger for what, turned out to be a 15% pullback in the S&P 500. And we saw the emerging markets bounce in October 2015, but then roll over again into the start of 2016. And again, going back to the S&P 500, the early weakness in the emerging markets kind of foretold what was going to go on here, and all told, when we rallied back up and didn't hold the moving average again, crashed back down, that's where the final move lower was in the S&P 500, and it lost about 15% of its value. And notice how on the bottom here we got these hammer candlesticks, and we kind of completed a double bottom. And back in the emerging markets, they actually kind of diverged and formed a higher low, which was a great little indication that this market, correction, bear move lower, was finally over. And then we were off to the races, eventually retaking the 30-week moving average and moving into a huge stage 2 advance with the the big stage 2 uptrend in 2017. So if you look at that and then kind of look at what's going on now, the emerging markets have been giving this bear warning sign for about 6 months now, going back to May of 2018, moving down into this stage 4 decline, and really never just continuing with it for a long time now. And the Russell 2000 with the big down move last week, but we've really been drifting lower for over a month now in the Russell. And we're at a key level of support here right now at the 1600 level in the Russell. And notice how we're at the 50-week moving average, which is kind of like the final line in the sand that I use to allow a little bit of volatility around the 30-week moving average. But that's why I showed that out of my charts. But the 50-week has held for the Russell 2000 the entire time in this stage 2 advance. So I view the 1600 level on the Russell as super critical. If the market is going to remain bullish over the near term, I want to see this level hold, and which is also like a retest of a former resistance in the Russell 2000. Turning to the S&P 500, I want to see the 2800 level hold, which would be a retest of the 30-week moving average. Again, that's kind of similar to where the Russell's at as far as retesting former resistance levels, and but isn't quite as low as the 50-week on the S&P 500. And then one other thing I'm looking for is the same kind of thing, where I think it's definitely possible that the emerging markets will diverge again, since they've been so weak, losing a lot of value already in this bear market decline. But they have a very good potential of putting in a lower high or higher low when they finally bottom, and that could happen before the S&P 500 finally bottoms, such as what happened back in early 2016. It kind of made the same, bottoming level, whereas the emerging markets diverged and made a higher low, and that just gives you a great indication that we're at a bottom. And a lot of people are definitely fearful down here, but if looking at these hammer candles and looking at the chart, that's what gives you a better, um, you know, kind of very early indication that we're actually at a bottom and not going to continue moving lower. So that, just to summarize, looking for hammer candles, looking for divergences in the emerging markets ETF, and looking for support levels in these key indexes to hold for the bulls. And if these levels break and we continue to move lower below the moving average, then really all bets are off, and we got to just let this bear move play out. Back in 2015, this lasted multiple months. There's no reason that couldn't happen again. But you really never know. So I'm prepared to play any scenario in the stock market, and I will definitely be looking for a nice stage 2, rally to the end of the year if we do hold here. But if we don't, then we definitely have to get more defensive and more cautious until the market improves and we see a resumed, stage 2 uptrend. So I hope this video helps. Feel free to reach out to me at nextbigtrade.com, and definitely, subscribe to my YouTube channel if you haven't already. I really like to get to over 1,000 subscribers at some point, so that'd be great. And good luck in your trading week next week.